Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick, Taylor Riggs, Sonali, Basak, counting you down to the closing bells here on this Wednesday afternoon. Here to help take us beyond the bell, it's our global simulcast. We're joined now by Carol Massar and a absence, Tim Stenovic, but nevertheless, we welcome our audiences across Bloomberg Television and radio.
Just checking if he was under the table.
I was going to start off with Tim for a change today, but Carol, I'll just start off with you here. The market looking a little weaker as we move closer to the bells.
Yeah, absolutely. We're seeing some selling into the close. You know, as for Tim, maybe he's just really nervous about Meta. Remember when they reported last time? It was a big disappointment, and we're seeing shares of Facebook down about 3% ahead of them. So I am kind of on pins and needles. They talked down this current quarter that they'll be reporting for, but let's see what they ultimately report, guys.
Yeah, and sort of similar stories that, Carol, when we think about other big tech earnings. I know Romaine always likes Pinterest and Qualcomm. Sonali, if you really think about leaders in chips and some of the 5G movements and really efforts and the exposure as well to the automotive sector here. So that could also actually be a pretty good read here on the economy and some of these inflationary supply chain stories.
Yeah, huge read on the economy. Ford, PayPal, ServiceNow, you have cloud, you have financials, you have automotives, you have so much to digest today in terms of how these big macro issues are settling in.
Yeah, and this is it. We talk about fundamentals, we talk about the macro. Those are kind of the two big topics here on Bloomberg Television, and they dovetail on a week like today, on a week like this one. You know, guys, we saw the results last night, Carol, and you see Microsoft up 5%, you see Visa up 6-7% here. It's not all bad. I mean, some of these companies are still doing well.
Well, and I think about, you know, the soundbite we played earlier, that this whole idea that companies are spending on CapEx and not all tech stories are bad right now. We'll get an update in just a moment.
All right, we're coming off of yesterday's massive sell-off here that took the S&P back deeper into correction territory and the NASDAQ into bear market territory. Not a whole lot has changed today. The Dow Jones Industrial Average higher by about 0.2%, roughly 63 points. The S&P higher by about 9 points or 0.2%. The NASDAQ, we're going to call that unchanged. It's down basically 2 points here. We wait for these numbers to settle, but basically flat on the day. And the Russell 2000, Carol, going to finish the day down about 6 points or 0.3%.
You know, Romaine, you can see the tug of war in the S&P 500, as you said, just a little bit higher. If I break it down a little bit further, 266 names in the index actually posted gain, 235 lower, so almost an even split, 3 unchanged, guys.
And take a look at the sector levels, Carol, as we always do for our radio audience, sort of the best performers, the worst performers. I'll start with the best. It is software and services, it's materials, it's transportation, it's energy. How much of that really feels like a classic risk-on move, Carol? Except to the downside, I'm going to bring your attention, media and entertainment. You're still off about 3%. I know we're really pushing forward to Meta. We've been thinking a lot about Netflix in the last few weeks, the guide lower from Snapchat, Twitter, of course, within that realm, Alphabet, of course, as we think, Romaine, about some of these advertising headwinds as well.
Yeah, keep an eye. The earnings now coming through. Hertz, the first out here, though, the ones we care about. Adjusted EPS coming in at 87 cents. The street was looking for 80 cents, so a beat on adjusted EPS and on revenue, also a beat. Carol, $1.8 billion. The street was looking for $1.76 billion.
Yeah, and take a look at shares of Hertz, what they're up about 1% here in the after hours. So getting a read. We're waiting for some of those big ones. Of course, we're waiting for Meta. We're waiting for HP. So we're waiting for a lot of other numbers to cross.
Yeah, I mean, of course, this is going to be the deluge today and tomorrow. Of course, the busiest week of the earnings season. And guys, I think when we look at Meta, it really is obviously the macro story when it comes to the ad picture here. But then you talk about, I think you were talking about this earlier when we were chatting with you, Carol, about this idea here of business spending and how that's been holding up.
All right, so should we go
take Qualcomm as well, Carol? Unless you have it here, we can
go ahead
about quarterly results here. We have at least the top line. Well, let me start with the current quarter bottom line. Second quarter adjusted EPS, 323 versus estimates of a 293. So at least the bottom line does indeed look better than expected. And the top line, Romaine, second quarter adjusted revenue, also a little bit better, $10.7 billion versus expectations of about $10.6 billion. Talking a lot about that forward guidance. Wow, again, further better than expected. Qualcomm seen third quarter revenue of $10.5 to about $11.3 billion. Expectations weren't even at $10 billion. So you're continuing to see this chip maker really push forward here, and you see some share movement, mostly on the day and after hours.
Yeah, and it's interesting to get maybe a little bit more breakdown of where this strength is coming from. Because remember, this is a company that was really trying to diversify away from the smartphone space into automotives and in other areas here, and it appeared to be doing a good job with that. So at least on the surface, when we look look at the earnings that we've gotten so far, it appears that maybe those efforts are paying off.
Yeah, guys, the commentary from the CEO is very positive over here from the CEO of Qualcomm. Another quarter of record revenues, execution of that diversification strategy, as you're talking about, Romaine. Stephen Scherer over at Hertz also speaking very positively. Cost discipline, new partnerships. So a little bit of a bright side here in the first set of earnings out.
You know, Qualcomm really important. We know so much of their revenue comes from phones specifically. It's been under pressure this year, down about 25%. Our Bloomberg Intelligence, though, talking about the 5G super cycle, going to give a push certainly to Qualcomm over the longer term.
Yeah, and I mean, look, I mean, we obviously they're dependent on handsets, but that's come down a little bit. And remember, some of the talk we've heard by the CEO with regards to the automotive business, you're still seeing some growth there. Still a small part of the business, but you got something like 21% growth in the most recent quarter in that automotive unit. That has to be certainly encouraging. And then the Internet of Things, which I guess is sort of the basket of everything that doesn't fit into sort of the smartphone and automotive sector, that was up 41% in the quarter on a revenue basis.
I mean, it's pretty unbelievable. Qualcomm saying that the revenue is still on track to grow more than 50% year over year in the fiscal year of 2022. So just a company that continues to get it done, Carol, as I know that we look at other earnings as well.
Yeah, Pinterest is another one that's interesting, and it's been under a lot of pressure as well. First quarter monthly active users, that comes in a little bit light, 433 million versus an estimate of 436.3 million. Let's go to the adjusted EPS, 10 cents a share versus an estimate of 2.7 cents a share. So that looks like a big beat there. First quarter revenue, also a slight beat, 575 million versus an estimate of 572.7 million. Now, this goes into the ad space, the user space, and just taking a look at what the stock is doing in the after hours, up Romaine more than 8% here.
Yeah, and with a company like this, I mean, that is so dependent on advertising to sort of boost that revenue. And then when you see some of the weakness that you saw in a juggernaut like YouTube, like Google's YouTube, you sort of wonder how does Pinterest sort of fit into that space here. But if they've got a certain niche, as we've talked about before, that is willing to stick to that platform and the advertisers are willing to stick by those users, then, you know, maybe this does end up becoming a much better story. Forward earnings crossing the wire right now. Let's go to that right now because we talked with the CEO yesterday, Jim Farley, about this. Adjusted EPS coming in at 38 cents. The street was looking for 36 cents. The company affirming its year adjusted EBIT guidance of 11.5 to 12.5 billion. Taylor.
We have Facebook Meta results coming out. Let me talk to you first here about Meta platform. First quarter Facebook daily active users indeed looks a little bit better, 1.96 billion versus estimates of 1.94. You talk about Facebook, that specific platform, that first quarter monthly active users, a little bit light though, 2.94 billion versus estimates of 2.95. Let's get down to some of the nitty gritty and the actual numbers. First quarter revenue coming in light, $27.91 billion. The street was looking for an estimate of about $28.24 billion. And you bring that down to the bottom line, managing that income statement fairly well with a first quarter EPS of a 272, well ahead of expectations of a 256. Ad revenue also coming in a little bit light, maybe as expected, given some of the recent guidance of other companies. $27 billion for first quarter ad revenue. Expectations here for about $27.4 billion. Finally here, Carol, when you take a look at the forward guidance, also coming in really light. Looking at second quarter overall revenue at 28 to 30 billion. The street was looking for above a 30, closing in on a $31 billion. So shares are jumping as much as 10% or so, maybe not as worse as feared.
Let's go back to when they reported last time, right? Mega disappointment, and they talked down the numbers for this quarter. So it almost feels like to some extent investors are breathing a bit of a sigh of relief. Keep in mind the stock is almost down 50% this year, off 54% from its high back in September. So investors to some extent, even though a little bit light, a little bit disappointment, these are still, Sonali, some big numbers.
Yeah, there are certainly big numbers, and you do hear Mark Zuckerberg speaking about the fact that they remain confident in the long term, and you see that in the expenditures. Headcount was increasing 28% year over year, so they're investing in people as they move towards this change into the metaverse. So let's see. We saw the stock decline into today. You see it rising after hours. Has it sold off enough is the big question.
Yeah, I mean, look, and we're talking about a company company. The shares were down, almost 50% on the year, to start the year here. But we talk about some of the growth that you're seeing in Facebook daily active users, which I think you went through some of those numbers. Yep. You're roughly up 3 to 4%, depending on how you're measuring here. And I think maybe that's showing some signs for investors, a little bit of an encouraging sign here that they can still grow what
engagement,
is
right?
For engagement, and it's a mature business too. And I think that's always been the concern here, that when you have something that's so big and so mature, how do you grow from that sort of baseline? And if they're able to grow even at 3 to 4%, that provides maybe a little bit more comfort to some investors out there.
Why don't we ask the man who may know the answer to that question? Of course, joining us here from Meta Platforms, let's bring in Mandeep Singh, Senior Technology Analyst here for Bloomberg Intelligence. Is it indeed some of the daily active user numbers, despite maybe the actual top line numbers from an income sheet that gives some relief here?
Yeah, and also their ad impressions grew 15%. So that actually beat consensus numbers. So the reason why they missed the numbers is because the ad pricing declined 8%, but the impressions grew 15%. And that's a sign that they are holding on to the engagement. So we know Facebook was making this pivot from, the feed base to more videos, the Meta Reels and the Instagram Reels. And that has a lower ad pricing. So we kind of expected going into the quarter that ad pricing would be down, but ad impressions holding up is a real positive. And also they are scaling back their guide for the total OPEX. Yeah. So that is a sign that they're not betting as big into Reality Labs as they laid out last quarter. So that's a good thing as well.
Well, what about the costs, though? I mean, because we talk a lot about the money that they're going to spend for some of these future initiatives. That doesn't seem to be a concern, at least right now, in the knee-jerk reaction by investors.
Yes, and look, they were losing about $10 billion on Reality Labs. At least that was the number last quarter. It's very similar this quarter. But what they're telling us is they don't plan to increase it. Okay. So that's a good thing, as well as the CapEx. They were spending additional $10 billion on building the infrastructure for the metaverse. Guess what? That's not going up. And a lot was already priced into the valuation. Look, coming into the quarter, Facebook was at its lowest valuation multiple it's ever been. So this is sort of a relief that, expenses isn't growing, the CapEx isn't growing, and the engagement is holding up.
Hey, Mandeep, it's Carol here. So what changed dramatically from that big disappointment in the previous quarter, right, when the stock just fell like a rock? What's changed?
Well, what's changed is last time they gave us a surprise that they are spending an additional, $20 billion, $10 billion in CapEx and $10 billion in OPEX on this Reality Labs. That's the first time we learned about those numbers. This time around, they're saying they don't plan to increase it, but they plan to pare back a little bit. And the core Facebook and Instagram engagement seems to be holding up quite well. So I think these are definitely good numbers. They missed on the top line, but we know it's because of the ad pricing, and I think that was sort of expected.
Mandeep, 43% operating margin this time last year, 31% this year. Is that the new normal for Meta?
For a while. So that's where the Reality Labs $10 billion loss comes into play. That's what's eating into the operating margin. But the core business, the Instagram and even Core Blue app, despite the lower engagement, continues to be above 40% in terms of the margin.
Just real quickly, is there a broader sort of metaverse trade here? Because, we had Qualcomm earnings out. They're doing well here. And I know there's been some talk that it's not just, the content creators like a Facebook, like a Meta that benefit from this, but it's chip makers as well.
Yes. So the metaverse trade is more on the infrastructure side. If you're exposed to infrastructure investments tied to metaverse, you may do well. Yeah. But in terms of applications like Roblox or, anything else, you are being hurt by reopenings right now.
Really appreciate it. Mandeep Singh, of course, so smart, instant analysis, senior technology analyst, of course, at Bloomberg Intelligence. And Carol certainly brings us into digesting a lot of these big earnings that, frankly, are better than feared.
Well, it's interesting. I'm looking at the NASDAQ 100 mini futures in the after hours, just up a hair, up about 2/3%. But I got to say, go back to Facebook, go back to Meta. Yeah. Up 12%. I do think investors are just like, whew. And as, Mandeep pointed out, maybe a little bit of disappointment, but so great to hear that they're not even spending more on these initiatives that might not pay off for some time.
Yeah, and I think that seems to be the key. And looking at shares up 12%, Pinterest shares up 16% here in after hours trading. So maybe it also is a sort of a little bit more resilience with regards to some of the ad spending and the outlook for that.
A lot of earnings. All right, we'll see how it plays out into tomorro's trade. All right, guys, we got to run.
Are you going to be here tomorrow?
I am.
What about Tim?
Still not back. No, he'll be back here tomorrow.
Okay, maybe.
All right, guys, we will catch you all tomorrow. Cross-platform coverage beyond the bell, radio, TV, and YouTube. We do it all right here on Bloomberg.